Yeah,
Sounds good.
so we are live. It looks like we're just going live right now. I'll give a few minutes for people to come in. Just trying to see. You guys are watching this. If you're live, just say hello in the chat so we can see you, and we'll say hello back. And this is going to be really exciting. I see there's already people pouring in to the webinar here. We're going to go live with Jim from Uzi Options and Lance from datatraders.com. This is going to be a really exciting webinar, I think, tonight. So you guys are in for a real treat. It's going to be a lot of fun. So welcome, everybody that's coming in. I'm really excited to have Lance and Jim here. And so stay tuned because Jim's going to talk about his earnings trading strategy. And this has resulted in 61 wins out of the last 64 trades, which is pretty good, right? I'm pretty impressed with it. So Lance brought Jim to my attention just recently over the last few weeks. And I'm really excited to talk to Jim tonight, and I hope you guys are going to enjoy this presentation. We're going to talk to Jim, and we're going to have some questions throughout the presentation and some at the end as well. And we'll field any questions in the chat as we go. This is going to be pretty exciting. I think this is going to be really good. You guys are going to really like this, I think. So make sure you stay till the end, though, because Jim's going to reveal a top earnings trade, one that he really thinks is going to work. That's going to be placed tomorrow. I think that's right, Jim, like tomorrow.
Yep,
and
it's
tomorrow.
something that they can get into tomorrow at some time during the day. Hopefully, as long as the stock doesn't move too much between the open and the time they try to place the trade, they should be able to get the fill that we got today.
Yeah, so he's going to place this tomorrow. So you guys, we're going to do that roughly around the end of the presentation. So make sure you stick around for that because it's something you could paper trade and be like, okay, I really like this. This is something that's like working really well, or you can really have a feel for what Jim has to offer in terms of his alert service as well. And we're going to talk about that at the end of the presentation as well. And so you could always take a small position or you could paper trade this. It'll kind of give you a taste of what he offers in this premium service. But really, this tonight is about learning how Jim has been a full-time professional trader for the last, since the late 90s, right, Jim? Like you've been doing this for quite a while.
1998. Yeah.
And so we're joined with Lance. You guys know Lance pretty well. He's from datatraders.com. And Lance joined the service recently as well. And Lance basically has won the last 9 trades in a row. So it's pretty interesting. The fact that Lance, who's already a very accomplished trader himself, is enjoying these trades. So I'm pretty excited to have Lance's take on these things as well.
The one aspect I'm not really an expert on is earnings trades. So I typically like to do trades that are not earnings. So I wanted to see what Jim was up to. I've known him for almost a year now via Twitter and just joined his group a few weeks ago. So been taking his trades. He's very transparent. He's very knowledgeable about the markets, and he gives good explanations on why he takes the trades he does. And so far, I'm very, very happy with the service that he has so far.
Very cool. All right, well, let's go full screen. And Jim, do you have a few slides at the start on who you are and what you do, or is more to do?
Sure.
Yeah, because maybe like an introduction to who you are. I'll go full screen right now so you just see your slides, and then we can kind of go from there. So
great. Well, thank you guys, Lance. Let me just make sure my screen is good. Thank you, Lance and Russell, for getting this put together tonight, and for sure, you guys are great traders yourself. And like it was mentioned earlier, I have been trading full-time since 1998. Some of you may have been around in the game at that point, and maybe you haven't. But back when I started in the mid-90s, when I first began, we didn't have decimals like we have now. We actually had fractions. So I learned on how to trade stocks and options based on fractions. So it was quite a learning curve when we switched over, and I believe 2001 or 2002. I forget the actual date that we switched from fractions to decimals, but I had learned how to trade and day trade very well at the time when I was doing stocks only at one point, again, based on fractions. And then when we switched to decimals, I had to relearn the art of trading, but not what I had learned previously. Because when we were trading in fractions, we were able to make quarters and halves and 3/4 of a point in our trades. That's how the prices would change. And then overnight, when they decided they were going to switch, it didn't happen overnight. It was in discussions for years, but when it came to fruition and we switched to actual decimals, we went from making quarters and halves and 3/4 of a point, 5/8 of a point on a trade to making just pennies. Because now, as many of you know, if you trade stocks and even if you trade options, things are priced by a penny. So you now are fighting for pennies So it began, what I learned and was pretty proficient at doing, I had to relearn, and it was quite a learning curve. But yeah, I started in the mid 90s. I started with options as I was running my business at the time. And I did very well, but back then I only did long only, and it was basically calls. The mid 90s was still the middle of a kind of a bull market. And it wasn't as easy as just buying a call on anything, but I did my research, which again, back then was prehistoric because we didn't have Google, we didn't have Facebook, we didn't have Twitter, we didn't have anything. I would spend time in the newspaper. Investors Business Daily was around back then, Wall Street Journal. That's how we used to get a lot of our information. I mean, the internet was out there, but it wasn't as saturated with all of the things we have at our disposal in a matter of seconds. So to say that I'm as old as dirt would be a joke, but it's true. I've been around this for a long time. I've traded just about everything you can name, and now I have specialties. And that's how I met Lance and Russell and some other people. But for sure, I've changed my styles throughout the years to adapt to the markets that we had in front of me. Because if you stay stuck on what you used to know years ago, you might get lucky along the way, but you really do need to adapt to the conditions as the market changes. And so that's what I did. But I began with options as I was able to make trades. And back then, it wasn't as easy as getting on your phone app, right? And logging into Robinhood or TD Ameritrade or any of these names back then. And there's some names that have been either gone out of business or have been bought by other companies. Scott Trade is a couple of names like Scott Trade. But you had to actually dial into your broker, and then each number on your phone represented a letter. So if I wanted to buy, let's say, a call on AMD, I had to press the number for the A, and then the number for the M, and then the number for the D. I mean, it was just ridiculous. It really was. Some of you out there that are listening now may be familiar with that, maybe not. But if you're not familiar with it, then you probably think I'm full of crap. But certainly I'm not. And it was challenging, but it was doable. So I did that for a little while, a couple of years, did well with that. And I had a friend who was a day trader of stocks. And, I was running a successful business, but he said, hey, man, I'm making what you make sometimes in 2 days, 3 days, in a week. What I make in a week, he's making in 2 or 3 days. He goes, why don't you come check out my place? And he didn't have it. He was part of a big trading operation where, again, back in the day, you couldn't go into your home office or in your basement if you're one of those basement pajama traders, right? And trade. You had to go to a location pretty much where they offered you a table, a desk, let's say, with a computer, with high-speed internet, and you could trade off of whatever software there was back then, which some of them are still around, some of them are not. But the long and the short of it is I began to change my style from options, part-time trading options, into now full-time day trading stocks. It took me maybe about 6 months to get ready for that. But once I did, I hit the ground running, and I had a great guy that took me under his belt, like I said. And if you want to Google something after we're done, you can write this down: SOES Bandits, SOES Bandits, SOES. What that was each letter represented a word. SOES is Small Order Execution System, and what that did was they tried to level the playing ground between individual traders, because again, we were, I'm not saying I was the beginning traders of day traders, but I was getting in right after it all started and started to get hot. They wanted to make it accessible for us so that there was more liquidity, and there was more, they wanted to open the doors to trading. That, I don't know if they wanted to get it to where you had rooms like we have now with discords with 1,000 or 2,000 people, and they're going to try to sway the market or do like a, what's that guy's name who artificially inflates the price of GameStop. But they wanted to bring in liquidity because we are liquidity. So if we're coming in with fresh money to trade, they figured, well, we're the idiots, right? So that we would be taking the other side of losing trades. But long the short of it is, we began doing what's called SOES trading, which guaranteed us 1,000 shares of a stock at the press of a button. So if we wanted to get into 1,000 shares of Netflix or IBM, whatever. You press the button, you're in. Boom, on 1,000 shares or 2,000 or 10,000, whatever your account could handle, and then you could trade it accordingly, get in and get out. And back then, fees were crazy. We paid about $22 to $25 each way, getting in and getting out. So we had to make sometimes 3/8 or a quarter of a point just to cover your costs, depending on how many shares you did get. So I've been there. I've been through that. I've been through, of course, the 2001 market catastrophe when the Twin Towers came down, which was a very sad day, and markets were closed for like 11 days. I've been through the crisis of the banking crisis and the housing crisis, 2008, the flash crash, I think it was 2011 and 12, obviously COVID and a couple of other, big events along the way. But I want to keep going, so I don't keep you guys here all night, but that's my history. So I'm trading for a long time, stocks, options. Not long ago, I'd say about a year and a half ago, I began dabbling into options on futures, which I do those as well. But the service we're talking about tonight is just the earnings portion. And throughout the years, I've traded earnings, and I've been amongst my peers, let's say, or other groups that I've tried and traded with, where they try to pick a side, and then they're going to run with it. Whether it's a long, we're going to bet that, let's say, Netflix or Nvidia is going to go up on their earnings, and let's just take that side of the trade, and it's kind of like a win or lose, and that's 50-50. And it's not even really 50-50, because even if you have the direction right, because of the implied volatility crush that usually occurs after a company reports their earnings, you could pick the direction right, and you can even sometimes pick how far you think it might go. But because of that IV crush, you're not able to sell or get out of your position at a profit. So I did a lot of research, and I've developed a method, and it's a system, and it uses a lot of criteria that a stock, number one, has to pass to get included to be a trade. So let's just say there's 10 companies reporting today after the close. I'm not going to put a trade on each one. I have to put them through a screening process. And if they pass the screening process, now they're eligible for a trade, as long as I can come up with a feasible trade that has a very high probability of profit. And when I say high probability, it's usually 80% or higher probability of profit. And a lot of the trades this particular earnings season are going great. A lot of them have been, you've had the ability to hold and keep 100% of the premium that you received if it's a credit trade. So I'm going to get into that in the slides. I just wanted to give you a little bit of a heads up of what's coming along the way. But my goal tonight is to share with you the method that I've kind of, it's a proven method now that we use to trade earnings, with earnings being the catalyst, because earnings are what's called a binary event. It's an event that's going to happen. It's scheduled, and it's going to happen. So knowing that, and knowing that you've got the implied volatility spike, which is what the market makers create, so that they don't get hurt. Because again, the market makers are usually on the other side of our trades, and they don't want to get hurt and lose their money and get fired by their bosses or get run out of the business. So they raise the implied volatility. All the prices of options usually get inflated, and because of that, that's the binary event, and we take advantage of that. Now, some people will say, "Hey, you're gambling. Trading earnings is pure gambling." And I say to that, what I say is this: actually, I beg to differ, because you could wake up tomorrow and IBM, a blue chip stock, or Netflix, or any name you want to, any company name you want to name, could have a bad news announcement. Their CEO could get caught doing something illegal. If you remember CrowdStrike, they caused an internet issue, and their stock crumbled overnight, and then for the next few days. So you're always at the mercy of a binary event. But the difference is that when you have an earnings binary event, you're ready for it, because you know the date that you're going to report. You have time to prepare your trade based on what you use for criterion in that trade. And I'm going to discuss those with you as we go forward. So if you ask me, they all have inherent risks, all trades, but you can actually remove a lot of the risk with an earnings trade that you would not have if you woke up one morning and your stock is suffering a catastrophe to the downside if you're long. because they had something happen overnight or happen to them overseas in one of their subsidiaries or something. So, I like I say, I beg to differ with the people that say earnings is gambling, but I'll show you how we do it. And then if you do become a member, I take time to sometimes get into the trades and show you why we're doing what we're doing. So you're going to learn how we do it and why we're doing things. But this method has returned 61 out of 64. Actually, when we put this program together, it was 61 out of 64. I think the numbers are now 63 out of 65. Or
Wow.
no, 63 out of 66, something like that.
Nice.
Yeah.
Nice.
I developed these throughout the years, going back to the 90s. So it's got a lot of track record to it, but I fine-tuned it in the last year or two. And again, this is just a little bit about me. I went full-time trading in 98. I've read a whole bunch of books, scanned a whole bunch of books, and while I do believe that's necessary if you're a beginning trader, even if you're a professional, or if you consider yourself professional or skilled, it's not a bad idea to go back and reread some of the things that you've already read, or just grab something you haven't read yet. You need to always be bringing in fresh information into your mind, because trading is something that you're always going to be evolving to stay alive. It's not something you learn once, and it's like riding a bike. You'll always know how to ride a bike. You'll always know how to trade, but the nuances change along the way. So what I do believe reading and all that is important. Placing trades, managing them, closing them, and then documenting what happened for the good and what happened for the bad is really the way to stay successful. Now, I do trade stocks, options, but options on futures and indexes. So I do it all. But this class tonight and this discussion is about earnings, and it's all about implied volatility. So the most important thing is you want to make sure that the implied volatility, which is going to be elevated for every stock on their earnings, they're not all equal. For example, Kroger, like a supermarket chain, or let's say Procter & Gamble, is not going to have the same implied volatility rank that you'd get on, let's say, a tech stock or a stock that's had recent news. So they're not all the same. So you want to make sure that you're trading a high implied volatility stock that is going to be worth it. So that, the juice has to be worth the squeeze, or the squeeze has to be worth the juice, however you say that.
Yeah, that makes sense.
Now, so according to Statista, at the end of 2023, there were 2,272 New York Stock Exchange stocks and 3,432 NASDAQ stocks. So with all these thousands of companies that report their earnings every 4 months, or every 3 months, pardon me, you say, wait a second, well, how come you only had 64 trades? And the answer is very simple. It's the screening process. If the screening process doesn't determine that a trade is worthy and in that high probability of profit rank, it's just, I'm not going to put a trade out on it. There's no reason to. That would be gambling. So out of thousands of companies, we only had, let's say, 66 or 67, I'd have to count, trades this quarter. So this is this quarter, not this year, this quarter.
Oh, I thought it was this year. Sorry, I think I've been telling people it's the whole year. So this is just
okay.
Okay.
Yeah. No, it's probably, I didn't probably clarify that. That's just this season. So second quarter earnings, 64 trades, which for me is a lot, because I'm screening. And then, as you'll see from the slides ahead, the order that I present to you when it's a trade is very detailed. So there's no room for error. You can read it. It's very easy to read, and it's clearly laid out. So I put that all together before I send it out, so that it limits the amount of questions or just confusion.
Cool.
And again, the reason why we trade earnings is for the premium capture. And what I mean by that is, normally we're selling options for earnings. Not all the time, but the majority of them involve some form of selling options to take advantage of that high implied volatility, because usually so if we're doing an earnings trade in the afternoon for a stock that's going to have earnings in the morning, the next morning, once that news is out, usually before the market opens, as soon as the market opens, the implied volatility begins to drop. It doesn't drop all at once. Over the first half hour or so, it takes a little bit of time. The implied volatility and the juice usually gets squeezed right out. So that's why sometimes if we have to get out of something first thing in the morning to save a trade or whatever, we can usually do that first thing in the morning because the implied volatility hasn't all been sucked out. And again, under most circumstances, we sell options to exploit that elevated implied volatility. But there are circumstances when a combination of selling and buying, sometimes within the same trade, is used to take advantage of that IV. So at this point, some of you might be thinking, okay, this is interesting. Maybe you think this is boring. You know it all. You know this already. But again, trading options, we use combinations of calls and puts. Now I can't tell you how many different types of strategies there are. There's just so many, but we use between 3 and 7 different strategies. They could be iron condors. They could be 1-1-2s, if you know what that is. They can be strangles. They can be short iron condors, long iron condors. There's butterflies we use. So there's a whole host of different strategies. And I don't really determine that. The analysis determines that. If there's a choice between a couple of them, well, then I'll really hash it down to see, okay, which one really has the higher probability of profit. And then that's the one we'll go with. Or I might throw 2 trades out there for the same symbol and say, pick one of your choice. And then that's the one we'll go with, or you can go with.
Nice. Yeah, so we haven't had very many questions yet. I think we've had a couple, so I'll just put up one. We're talking about it right now, but I don't know if you can see that on your screen. It says, thanks for this. Are we going to talk about the selection criteria during this presentation? And I think you are a little bit, right? You're starting to talk about the selection criteria.
We will be, Jaya. We will.
So the important thing here is a lot of people are told that earnings are just like no-go events, right? A lot of people are told, don't hold through earnings. It's a gamble. Don't do it. And what you're saying is actually, this is something you can capitalize on. This uncertainty, this implied volatility that comes in early on before earnings is something that you should actually be thankful for and something that you should actually play. Yeah. That's kind of the idea, right?
Exactly. And you couldn't have said it any better than that. And also I'll allude to what I said, maybe 5 minutes ago, is that, this event is going to happen. I mean, think about it. Normally you're trading stocks or options. Well, we're talking about options here tonight. So let's focus on that. When you're trading options, and you want to make money on it. So if you're going to be buying options, which again, I very rarely, if ever, buy options. And the reason because is 90+% of the buyers of options lose money. So you have to be on the right side, and that's the selling side. Now, the only way to make money selling options is to sell and let theta decay and let implied volatility drop on that option after you've sold it, right? So that there's an elevated situation in a stock because of their earnings. You're able to prepare for that elevation of implied volatility and then place your trade at the highest moment of implied volatility, because the next moment, once those earnings are released, the implied volatility has nowhere to go. It's like a balloon that's going up in the air, and then there's a slow leak that develops on its way up. It's got nowhere to go but back down. And that's what we're taking advantage of, is that implied volatility crush. So knowing that there's an event coming up, which you can prepare for, which is the earnings, that the stock is going to make a move, and usually it's a substantial move. It's a higher than average move, and an above average move for that name, which is why everyone is scared to be in a position before earnings. Oh my God, what's it going to do? Is it going to go down? Am I going to lose all my? Is it going to go down to where I can't get out? How long is it going to take me to get out? So knowing that we can actually be on the side where we don't have to worry which way it goes. We're in a position now, just let that implied volatility drop the next day. And if we have to be in that trade for 2 or 3 days until the end of that week, because none of our trades last longer than that unless there is an issue and we have to roll it. And then that gets under management. And I'm always here 24/7 support if we have to roll a position and then sell premium to bring in to work that position. But 99% of the time, 99% of the time, our positions will expire worthless to the person who took the other side of our trades, and we'll be able to keep, I can't promise you, but a good close to 100% of the premium capture. Now, if we can't keep 100% of the premium capture, keep in mind the percentage profit that we're making is within 1 week. So if we put a trade on a Monday, it's a 4-day, 5-day trade. If we put it on a Tuesday, it's a 4-day trade, and down the line. But the point is we're usually out of all of our trades by the end of the week. And even if you just make 8 or 9 or 10, I say even, we're making 8 or 9, 10% within a week on the money that you've used. So on your capital that you're using to put up for this trade, we're usually making, at least if we have to close it, 8 to 10% on your money. And if you know anything about interest rates, I'm sure you do. You're making 5% a year. So we're making that in a week. If you compound that times 12, times 52 weeks, I don't even have my calculator near me to figure it out. It's in the hundreds of percentages.
Yeah, definitely.
But we're not trying to sell you on we're not telling you all that. What we're trying to say is that either way, even if we don't keep 100% of the premium capture and you make 8 or 9, 10%, it's still a great return on your money.
So we've had a couple other quick questions and then we can continue. So the one that's on the screen at the moment is how many times do you have to roll from the 65 trades? So you're getting the deep questions straight off the bat. So people are seeing the fact that you're doing 64, 65, 66 trades and saying, okay, are you rolling half of them? Are you rolling one of them? Like, I know roughly what the answer is, but I'm curious to see what your response to that is.
Sure. And great question. Thanks for getting to that early. I was going to get to that later on, but 60. So let's just say 66 trades, just so we can keep it easy. 66. 64 were closed for profit, 2 rolled, 1 assignment, and the assignment is in the money, which we also received a dividend on.
Cool. That's good enough for me. That's a good enough answer. And we're going to go through some trade examples. So Shyam is saying, can you share some examples of trades? We're going to do that. We're actually going to give an example trade out, which is something that I think Jim's going to take tomorrow so you guys can actually see this in action. So we're going to give plenty of examples as far as I know, right, Jim? I looked through your presentation. We have a few.
We've got examples coming up. Sure. If everyone's ready to go on, let's move on. Sure.
Yeah. Okay. So let's just quickly, a couple of quick other questions here, or we could wait until the next break here. So Shyam's also asking, what is the average win, smallest win and largest loss? We can go through that in a little bit. Let's hold off on that just now while we get on with the presentation. And Martin J's got a similar question: is how much do you win when you win and how much when you lose? So I can see where these guys are coming from. They're seeing the 65 trades, the 61 losses, and they're thinking to themselves, yeah, sure, this guy's making like pennies on the 61 trades and then he's losing it all in the last 4 or 5. And I don't blame them. If people have that mentality, and I've seen that in some strategies. But I know that's not the case with your strategy, but let's talk more about your strategy and then address those kind of numbers. Sound good?
Yeah. Sure. So just moving forward here, the key is implied volatility. And again, we're talking about the decay of options, which again begins to occur as soon as those earnings are released, and as soon as the market can begin doing what it does, and that's trading, up, down, and decay starts to work on it. And what implied volatility, some people have an understanding of it, some don't. So I'm going to let Investopedia describe what it actually is here. The term implied volatility refers to a metric that captures the market's view of the likelihood of future changes in a given security price. Investors can use implied volatility to project future moves of supply and demand, and often employ it to price options contracts. So it's basically that, and plus what I have said, in that the implied volatility, is a stock is going to make a major move, so its implied volatility is going up, and once the news comes out and the market can digest, well, how good is that news or how bad is that news, it can then determine where we're going to take this stock, where the market's going to take that stock, and that's really what the metric cap is talking about. So the $1 million question is kind of like, what do I look for? And again, it all starts with implied volatility. And what we do is we looked at the near-term options. So we're not looking at 1-month options. We're not looking at leap options. We're looking at the near term. And I should mention, I never trade monthly options unless we are in that week of a month where it would almost be like a weekly option. So for example, last week was September 20th. If a stock only had monthly options, and I wanted to do a trade, and trade presented itself, but it only has monthly options, I would have entertained that because last week was the third week of the month, which is when monthly options expire. Otherwise, we're doing weekly options, and there's thousands of companies that have weekly options. And I don't know what everyone uses for their brokers. I use Thinkorswim, which is now owned by Charles Schwab. It was owned by TD Ameritrade for the longest time. And it's all laid out for me right here. So this actually is NVIDIA, I believe. No, it's not NVIDIA. It really doesn't matter. But I just use it as an example because the price here is 580. This might be Adobe or something like that. But the applied volatility is easy to find. So it's 132 over here. And then you can see that this is a weekly expiration. And this company, whatever this company is, has weekly expirations, as you can see along the left side as I'm moving my cursor. Now, what I mentioned before is that all implied in volatility is not the same, right? So if you see down here to the lower left, Thinkorswim is gracious enough, and they actually give you the current implied volatility percentile. So this is one of the things I also look at quickly, and I make sure we're in a high ranking, and 80% is a very high ranking. So this makes the grade. Okay, that's just step one. And I mentioned that there's about 11 things that I have to see before it gets included. And then of course, I do the analysis. The second thing I look for is the expected move. And again, this is the Thinkorswim platform. This is Adobe. I thought so. That's from the example before, right here. 580 is the price you can see up there. So what's Adobe? And what it is the market maker move is pricing in what the market is expecting the price could move up or down, plus or minus, after they report their earnings. So on Adobe, it was anywhere between $40 and $42 is the expected move with 132 implied volatility. So that's almost certain to get into the inclusion for a trade, and it was. And I believe with Adobe, we were able to keep 100% of the premium. So some of the other things I look at, and again, it takes me a while for each trade. I'm usually up the night before, sometimes till 12, 1 o'clock in the morning, my time, researching and looking at all these different aspects, as you see here: support, resistance, open interest, gaps, short interest, Fibonacci levels, moving averages, past earnings moves. I take all these things into consideration, and then I come up with a trade that's hopefully going to be, well, let me back up. All of these things have to line up. There's no hoping. Once these all line up and they pass the test, now we have a trade on, and then it goes through the analysis for what type of a trade. Is it going to be one of, let's say, an iron condor? Is it going to be a 112? Is it going to be a strangle, or a strangle with a long put spread embedded in it? So I guess we can skip over questions at this point, right, guys?
Yeah, there's not a lot of questions coming in, but I think the answers the early question, which was what is your selection criteria, that definitely answers like what you're looking at, and that's a lot of work. I mean, that's something that you spend a lot of time on, and it's pretty impressive that you go through all of that. So I really like that. That shows like that you're really taking into account everything, basically, that you can.
It's everything you can. It's everything you can. Right. There's maybe one or two other things that's, well, there's MACD, there's RSI, there's
a few other things, yeah.
Stochastic. There are other things, but I've found that those don't matter as much as the other 11 that I do use.
Yeah, definitely. Yeah, I would just keep going. There's no real questions at the moment. If people are asking about what are your smallest wins and all that stuff, we can address that as we go on. So let's just see some examples and talk about stuff a bit more, and then we can answer those questions. Sure.
So let's get to our first example. First one being the stock of the year. I guess I would think NVIDIA has got to be everyone's stock of the year, right? Everyone was wondering what's going to happen to NVIDIA.
Yeah.
And we did trade it. We certainly did trade it. And this is the chart of NVIDIA leading up to their earnings. Now, I'm going to use my highlighter so you can see.
You might want to zoom in a little bit as well. It looks a little small to me. Remember, we were talking about how you could maybe zoom in just so people can see the chart a little bit better. Yeah, it's a little better. You can see, that's better. We can see the candles and stuff.
I can expand it, I believe. Let me see.
No, it's good.
Yeah, that's pretty clear. I can see the
I
candles.
believe I think that's the largest I can expand it. Yeah. So this is the daily chart leading up to their earnings. Now down here you can see a red dot and a blue dot, and what that means in the Thinkorswim platform is that there's going to be earnings and an earnings call. But I wanted you to see just where the price chart was located prior to their earnings. So this is the day before earnings. So you can see it's right above this yellow dotted line. That's the 50-day moving average. It's right below the 8 exponential moving average, right above the 21 exponential moving average. And this down here is the 200-day moving average. And then you have the Bollinger Bands here.
Sure.
This is just showing what it looked like the day before.
Yeah.
And then, let's see if I can. Well, no, let me back up. So based upon the analysis, it was determined that the best thing to do on this stock, because here's the thing, we knew that the whole world was waiting to see what was NVIDIA going to do. And you had traders on both sides of this thing, thinking it's going to go down and test this 200 moving average at 87, and some thinking it was going to make a new all-time high, which at that moment had been $140.76. So you knew it was going to make a move. We just didn't know which way it was going to make a move. And we knew it was probably going to make a move at least to what the market maker move was calling for. I don't recall what that was. I believe it was 11 or 12 points. So the trade setup was determined to be what's called an iron condor, but not a traditional iron condor, which is one that you sell. This was a long iron condor. I guess can you all see this?
Yeah, I can read it fairly well. Hopefully you guys watching can read it too. I think we can see that, yeah.
So this is an example of what a trade order looks like when it's posted in the Discord. You get the trade alert will pop up. It'll show you the symbol, the strategy, which is a long iron condor, the expiration, and then the actual trade. So you're going to be buying a 123, 120 put spread. Now, I've since changed the amount. So I was putting in what I was going to be doing in one of my accounts. I now just do it as a single trade so that you can size it to your account and to your risk appetite. But in this particular trade, it was ×5 and buying the 126, 129 call spread by 5. So basically we're straddled. It's really not a straddle, but this is a long iron condor. But you could look at it like a straddle with buying, with selling the ends or the wings. And we're straddling the stock on each side. So we just wanted to make a move. We needed to make a move of about, at the time, where was the stock again? Let's see. The price was about 123. About 123. So we're straddling this. What was the price? It's about, I think it was close to maybe 124, 125. So that's why we were straddling at 123 to the downside and then 126 to the upside. And here are the my trade executions, so you can see. So the green is when I opened the positions, and it cost $2.63 to get long each contract 5 times. Okay, and then let me fast forward. And we'll come back to that in a second. But here's what happens the next morning when they reported their earnings. And this, I believe, is, this looks like, I think it's a 5-minute chart. Could be 15. But so the stock gaps down.
Yeah.
You can see how it gaps well past the 120, which is the lower end of the put spread. So we bought a 123, 120 put spread. And I'm marking right now 120 right here. So we knew it had to stay below 120 by that expiration Friday. Now, we didn't close this the very next day because, again, implied volatility did drop, but we didn't get to the point where we were able to sell it for, we could have sold it for profit, but we didn't just want to take, let's say, a small percentage profit. Knowing that this had the potential to keep going lower, there's no reason to close it. And that's another thing. I guide you along the way on what I'm doing. You can always do whatever you'd like to do, but in the morning we had profits. But I determined, let's let this thing ride, because this stock can go down to 110 and we can just let it expire. And in a case like this, you can just let everything expire on its own, so you can save commission costs in case you're concerned about commissions. And it would expire at the full profit, which is the value of your width of your strike. So if it's a 123, 120 put spread, the full value is $3 or $300. And we just saw that we paid $263. So per contract, you were making about $37 per contract. And the math is going to come up for us in a second. But this is what the stock looked like the next day. And then this is that particular Friday. And you can see, this is now back to a daily chart. You can see that by the end of the week, which is this day here, the stock closed below 120. It closed about 119.37. There you can see it right there, split up, 119.37, which closed below 120. And so we were able to keep the profit. And we did the max profit. And now here's the math. So the math is like this. So it's a $3 wide on each side. Max profit's $3. The cost was $263 each. We did 5 contracts. If someone is in the group and they want to do 10 contracts, they want to do 100 contracts, or they want to do 1 contract, that's entirely up to them. The percentage gain is the same. The risk level goes up on your end if you're going to change, whatever sizing you want to do. But if someone did what I showed here, then those 5 contracts brought back $185 within 2 to 3 days, 3 days, I guess you want to call it, costing you $203 per contract.
Yeah, and guys, we're going to give out a trade alert in the next probably 20 minutes or so. So if you want to keep listening to this, because we're going to give out tomorrow's example, right? Right, Jim? That was the idea. So we could do something like this. This could easily.
That's coming up in a couple slides. Yep.
Yeah, just so you guys know that this is a good previous example, but there's going to be an actual practical example to check out tomorrow, coming up very soon.
Now, what I wanted to go back to was, okay, so actually we did all right. We already covered that. So how did I decide on this trade from the video? Well, like I said earlier, the press release of NVIDIA was going to be all the hype. Just you knew the stock was going to move. And again, the safest trade for this was going to be just longing it on both sides. Again, my preference is to sell options on earnings, but if the analysis doesn't present itself for that, then we don't do it. This trade presented itself for a long iron condor, and I must say, I think every single one of the long iron condors we've done this season has worked to some degree, whether it's 100% of that width of the strikes or 8%, 9%, 10%. So another example is Dollar Tree, but this had a different trade strategy. So after analyzing Dollar Tree, and this was before some of the news events came out that some of the retailing companies, the discounted retailers, were going to be struggling for the season. But Dollar Tree was an example we did, and this is what it looked like leading up to the event. Right here, this is the day before earnings here. And then here is the day when they had reported their earnings. And you can see it kind of capitulated, if you will, because it had already been in a down move. It was already downtrending, and it already had one gap on its way lower. And then this is what they usually call sometimes an exhaustion gap or a capitulation gap, because the price didn't go anywhere from there but back up. And the trade that presented itself after analysis on this one was, and if you're familiar with a lot of what Lance and Russell do, this was what's called a put ratio spread 1/3. And what it is just a put spread, a 1/1 with 2 extra puts to create a nice size credit. And with the added benefit that if the stock does exactly what Dollar Tree did here, which was fall out of the sky, we have a long put embedded within this spread that will capture additional profit if it makes them far enough along, a decent enough move, which it did. So what the trade looked like is this. We bought the 65 put spread by 1, and then we sold 2 extra 65 puts. Okay, and what we try to do is we try to fill this all in one order so that it's just simpler. It's just a simpler way to trade, and you don't get as much anxiety if you only get filled on one. Once you know, because you could do this in pieces. You could do just a 66, 65 put spread, and then just sell 2 puts on its own. If you really want to, that's up to you. But I usually recommend just try to fill it all in one order. It's simple. It's easy. Most platforms will let you do that, and it's really the way to go. Again, the fill price was a 58-cent credit per contract, and this used $1,300 in capital. So it's basically a buying power usage. Now, a trade like this has no upside risk, and the reason is very simple. We have basically bought a put spread and sold 2 naked puts. So this stock can go up as high as it wants, and this has no effect on us. Matter of fact, if it goes up, we just get to keep all the premium. We don't have to close any of these positions, any of these contracts. No extra cost for commissions if you have a broker that you pay for commissions, and so it's a win-win if the stock wants to go up or go sideways, or sometimes go down but not challenge your strikes, right? But in our case, in this example, we did see the stock price fall. It fell pretty hard, and it fell into what's called a trap. If you're familiar again with what the guys do over here with Lance and Russell, you guys, they do, it's kind of like a trap play where if the stock falls between somewhere close to 66 and 65, you get that added benefit of being able to liquidate that put spread, long put spread for a profit, and we were able to. And by the way, I want to also note that at the bottom of the order entry here, you can see the risk level. I usually give a risk level of 1 through 5, 5 being the highest. Now, this had a risk level of 5 because we had 2 naked puts at the end. That's not really a scary trade because if you are assigned on something like that, you can roll, you can sell covered calls against it if you are assigned. But a lot of times you can roll these. I mean, usually you can roll it as long as it's not a stock that you're down 50 or 60 points. I mean, SMCI, you might not be able to roll. That might be one you might not be able to roll, but it depends. But I've never had an instance where we can't roll. I mean, we can always roll. Even if it's a call that you get stuck on, you can roll. And then, let's be honest, right? If you guys are traders, you can't tell me you've never gotten into trouble in a trade. And if you did, hopefully you knew the way to get out of it. And that's the beauty of options. You can roll, you can create new trades from within that trade. You might have a position on which you can turn into, let's say, a broken wing butterfly. I'm sure Lance and Russell have done that in the past, where you've got a situation where, oh my goodness, now this is underwater. What do I do? You can create a new trade from with what you've already got and build a new credit around that. So there's always a way to get out of a trade if it goes awry with options, which is the beauty of them. And it is the case with stocks too, but to a lesser extent, because once you're in a stock and if it's down 20 points on you, the best you can do then is just start to sell covered calls and puts if you don't mind getting assigned more shares. But I usually assign a risk level. And again, 5 is just because we had 2 naked puts, and you need to be aware that you have that much in your account to cover the buying of those 200 shares if you have to buy them. Again, most of the time, you don't have to buy them. They can be rolled. But everything comes with a risk level, and then you can take it from there to, if you feel it's too risky, I always tell people, if you don't feel the trade is good for you, you don't feel that you like this particular stock, if you had to take it and roll it or get assigned, then you don't take the trade. It's very simple. There's plenty of trades.
Right.
So this is what it looks like in the order entry confirmation that I got from Thinkorswim when I placed the trade. It's a 1x3, as you can see. So we're buying a 66 put, and we're selling 3 of the 65 puts. It brings back a credit of 58 cents. Now, this is what the stock looked like on the, this might be the 50-minute chart. We can see where it gaps down that following day and then trades up all along the way. Once it finds in this low of 60.82, it goes nowhere but back up. But in the meantime, when it was below our strike here of 65, for the time being that it was, we liquidated the 66-65 put spread. Now, you never know the best time to liquidate that. And sometimes you can let that expire for full profit of $100 because it's a $1 wide, so that's $100. And that was my intention because the stock price was down to 60 and it was a 66 by 65. My intention was to let it expire. However, it began to eat its tail, I call it, and start to come back up. And once it started to come back and get near 65, I decided to close that long put spread up portion of it. So that's what that looks like here. So we closed that 166.65 put spread, and we brought in an additional $42 on top of the $58 that we had originally taken in. Okay, so that's bringing $100 even. All right, and if I yeah, thank you. And if I go back, we used $1,300, so we made 100. We made 100 on 1,300. So on that trade, that was 7.6% of a 7.6% return on capital, but we kept 100% of the premium, I believe. Yeah. No, 67% of the maximum premium, 6.9% return on capital.
Nice.
Here's what it looks like, the math.
Pretty good.
That was a 2-day trade.
Cool. And that's the type of trade you can expect to get roughly coming up in the next 5 to 10 minutes. So very similar in terms of the math, hopefully. So
yep.
Yeah.
Now these are just 2 examples of the strategies. Again, there's just straight up strangles. There's sometimes just naked puts or cash secured puts, if you want to call it that. Sometimes it's a naked put and a call credit spread. Because again, when you buy the wings on a trade, so let's say you short a put and then you buy the wing, which is trading a spread, you're buying it, so you're spending money. So if we don't have to spend that money, we can create a higher credit. So sometimes it'll be just a naked put with a call credit spread, so that we're protected on the upside in case it blows through. But yeah, there's a whole host of different strategies that we use. And again, it's determined by what the analysis determines.
And I think that's an important point, though. Just that last part there, that last sentence. It's a system that has taken years to develop. So this is not something you come up with in 3 months or a month of trying these strategies. This is years and years and years of working this stuff out. So that's where the value really is with Jim and his strategies and things. So it's important to realize that this is not some 21-year-old guy who just started a Discord and 6 months later he's telling you how to sell cash secured puts or whatever. Like, this is a whole different level of sophistication, and hopefully that's coming across in Jim's narrative here, that you guys can see that this guy knows what he's talking about. So
and no disrespect to you young guys out there who might be in your 20s, but I certainly was not trading in my 20s. I didn't trade into my 30s for sure. So that might give you an inkling on how old I might be. But for sure, I was never a know-it-all 20-year-old thinking I'm going to be selling trading advice and trading suggestions and strategies to anybody. Hey, listen, power to you if you're able to do that at a young age. You're much smarter than I was at that age. But basically, trading wasn't around when I was 20 years old. Not to the degree that you could take advantage and try to make money. Back then, you could maybe buy penny stocks from a broker who was calling you on the phone, but that's about it.
The Wolf of Wall Street style.
The Wolf of Wall Street style, right. Yep, there you go. So I'm going to run through these quick because these really don't matter, but these are some of the returns, and a lot of these are from the iron condors or just naked puts. You can see below here, Merck was 14.7% return on risk, Microsoft 8%, 11.9% Humana, but a lot of them were 100% premium capture. That's 100% premium capture. Avago was 8.2% return on risk. FedEx 4.6% return on risk. So those are some of the. So right there is the answers the question before. What is some of the least amount you're going to make? So look, that's up to you. If a trade is a $30 credit, then if you do one, you'll make $30. If you do 10, you'll make $300. Simple. And as far as losing, we have booked and closed no losers. There are no realized losers. There's 2 positions that we have on roll, and we're managing those week by week, selling calls, selling puts to lower cost basis, and to be able to get out of that position at either a very small loss or break even or even profit. So to answer the question, the most you can lose, the most you can make, or least you can make, is up to you. But you're generally going to be bringing in no less than $20 to $30 at the lowest per contract. And again, now if you want to do 2, you want to do 10, that's up to you. You want to play it safe and make. Listen, if you do 15 trades a week, making $30, that's $450 a week for ideas. Times that by 4, that's $1,800 a month. That'll pay your mortgage if you just take in $30 a trade. So do the math.
Yeah.
But again, some of them are the $100 winners. Some of them are the NVIDIA $185 winners. I had a trade. What was it? I believe it was FTX on their earnings. That was a 500. No, I'm sorry. It was Oracle. It was Oracle. It was a $500+ trade winner. Yeah, this whole presentation was already put together. Otherwise, I would have included Oracle. But there's no limit. It depends on what the trade can present, as far as making.
Yeah, for sure.
And again, I'm sorry. Go ahead.
Oh, I was just going to say, cutting to the chase a little bit here. So this is fantastic seeing your system, how you select these different trades and things. But a lot of people, like, what they really care about is you have this really high success rate. Are you giving it all back on a few losers, or are you maintaining a profit factor that's greater than 1? And I know the answer, but I'm just curious to hear from you. Like, how much have you made this year in terms of account growth, or this quarter? And a few people are asking this kind of question because they're smart guys. These people are watching this. These guys know that you can win 90% of your trades and still be an unprofitable trader, because the 10% that go against you so hard that it wipes out all your winners. I know that's not the case with you, but I think it would be really interesting to address that. I don't know if you address it in the last few slides, or if you want to make a comment about it here, just to kind of, give these guys an idea.
I can address that here. So I believe this might be from Martin, but if there's others as well. So I don't know how to say it any other way. So there have been no realized losers. So you're asking, how much do you lose when you lose? We haven't lost. We haven't booked a loser. I mean, are we down? Sure. But that's not a loss in the sense of we've had to close this position, or we got closed out of this position because we were margin called. They're all manageable trades. So we've booked no losers. I don't go by mark to mark. How much is it up today? How much is it down tomorrow? How much is it going to be up by the end of today? I mean, you can't watch every nuance of the trading of a position if you're managing it. That's the beauty of options. You don't have to close it until you either decide to take a win or a loss, or unless you get margined out and your broker calls you. And we don't size. I always recommend, don't size your positions that is a make or break onto your account. I mean, Martin, that would be crazy, right? So to answer your question, there have been no realized losers, as God is my witness. And you can believe that or not believe that. That's up to you. If you don't know and you're not sure, I tell you this. You can see for yourself when you come into the room, and then maybe we can figure out some type of an opt-out for you after a certain period of time, if that's what you're afraid of. But by all means, no realized losers. And even if you're in a position which needs to be rolled and managed, it's manageable. It's always manageable.
Yeah, and Chime's saying it's very impressive so far. I like it, and I agree. I think having somebody of your caliber talk us through this stuff is really good, because, like I said, the main thing that differentiates you from a lot of people is your extensive experience and your extensive testing and refining of the strategy over the course of time. And I think that's what's missing a lot of the time. So do you want to do a quick few more questions? And then I'm not sure how many slides you have left.
I only have a few more left. I'd like to show these if I can, just so that some of the people that have question marks in their head and not so sure, I totally get it and I understand. I was you at one point myself, but I have some reviews. These are not paid reviews. These are just some members from my room that
Can you
have
zoom
taken
in
the
a little
time.
bit? Can you zoom in a little bit? Can you zoom in a little bit? I can't really read them, or is it not going to go off the picture?
Let me see if I think I'm at max zoom, but let me see what I can.
You could just read them out. I mean, people can sort of read it. Just if you could read them out, that might be helpful.
Okay, so the most recent one was done 6 days ago. It says, if you are looking for a signal service, this is hands down the best one I've ever been a part of. exclamation point. It doesn't take much capital for most of his trades, and most of the trades are also shorter term DTE, which is days till expiration trades as well, which is what this gentleman likes. The previous one was 8 days ago by Matt, and Matt says, I've known Uzi prior to joining his room through posts on Twitter and from other connections. In that short period of time, I saw a skill that not many possess in selling options. And as I look to finesse my skill, it was a no-brainer to join the Discord. Uzi has been great at guiding and discussing consistently risk management and why a trade is on the radar, which for me is what I am trying to improve on. The success of his alerts is amazing, and an added bonus to being in the room is the education from learning options selling, which was real key for him. He says you can easily blow up an account if you don't understand the skill, and therefore learning from someone who is very experienced is extremely helpful. Selling options is a real craft you won't necessarily find online or a group of experienced traders to connect with. And so being in this room and learning from his years of experience is a real treat. And Matt's a great member. He's very enthusiastic. He's very upbeat. He's always on the win-win side of things, and always looking to take advantage of an opportunity. And he's usually in on every trade.
Yeah,
I had more. Here's a couple more actually. JK says JT is very knowledgeable, especially with earnings. The risk to reward is very good, pretty good, and he has trade alerts for any account size. Very helpful to all of his members who have questions, and even puts out bonus trades. And that's a good point. I'm glad he read that. He said that because if you do join, what I am going to be providing is 1 to 2, maybe 3 bonus trades a week. And what that is so there's other members in my Discord that are full members, let's say, and what they do is they take all of my trades. But you're going to be getting 2 to 3 a week of my other trades, which are bonus trades. So on top of the earnings trades, I'll be peppering in the most, not the ones I think are going to work the best, but the most, I guess, name brand symbols that you might feel that you might want to trade. Name brands, Netflix, Nvidia, all the big names, Amazon. One more, and that's from V Trader. Jim does a great job of carefully selecting trades based on risk to reward and also managing them through closure. So that's the point, guys. We're not just going to throw on trades, hope for the best. If we get into a situation, I'm here. I'm here for you guys 24/7. The only time I'm not available is when I'm sleeping. Otherwise, I'm around. And sometimes I am. Sometimes I am on my phone when I wake up and I can't sleep. So if there's an issue and you need some questions answered, I'm always around.
It's like 20. It's like 27 because you're very active throughout the day and night.
Yeah. And Sham saying here, it's very impressive so far. I like it. That's really good positive feedback. Thank you for that. I always like to see positive stuff.
Yeah, I like it too. Just a few points of what I've seen in the Discord. They're not all sell side trades. Some of them are buy side. We recently did Iron Condor with the buy side. So what's good about those is if it's an earnings trade, all you need is a small move, either up or down, and then it'll work out. Because say the put debit spread might be at full profit if the market drops, but the call debit spread still be worthless. However, you're still going to get that max profit in that case.
Very
true.
And
Hamad here saying how much capital is required. That's a good question. How much capital is required on running all of your trades that you're alerting in your Discord? Is it like, could you do it with a $5,000 account, or would you want 10, 20? Kind of.
Well, that's a great question, Hamad. Here's what I would say. So if you have a $5,000 account or a $500,000 account, you can take part in the room to a great extent. And if someone comes into the room and they have a small account, and I'm aware of that, all you have to do is let me know. I've done this for other traders. JK is one of them, one of those people who did a referral. A review. There was a couple of trades he just couldn't take. He had a $5,000 account and he was in a couple of other trades from another Discord. He said, I can't take that trade. It takes too much capital. I said, no problem. Tell me what you got, what you're working with. He told me how much he had available to trade with. So I customized and put together a trade for him. I believe what in his instance is 2 times I had to create for him an Iron Condor, a short Iron Condor, instead of the trade that we were doing. So if let's say it was going to use up $3,000 and he only had 1,000 to use, I was able to put together an Iron Condor for him. And if you know anything about Iron Condors, we were able to then take take the capital required down to $500 or $1,000, depending on the width of the strikes, and then how many contracts he actually wanted to do. So if someone has a small account and they can't take a particular trade, all they have to do is hit me up on a DM or put it out in public there in the main group chat. Say, hey, I can't take that trade. My buying power is low. Can we come up with an alternative? And I can certainly try to do that for you. Not a problem.
Yeah. In the last few weeks, I've taken pretty much every trade that you've done, and you really don't need a large account size to take these if you only want to do one contract. But also, it is very easily scalable. So if you have a larger account, you can easily do more contracts.
Cool. So back to Iraqi Trader. This is the big question. What was your P&L for the last 12 months? I know we talked about 60%-ish, but I'm not sure if that was per quarter now or if it was per year or like I'm kind of.
That was, I believe, the last 6 months. So if Iraqi Trader is satisfied with that, it's down to 50. Where I think it was at 57% the last time I checked.
Nice. So my market material is off by a factor of 2 then. So I said that was in 2024. And so you've done 50 to 60% in the last 6 months. So that's pretty good, guys. I mean, that's pretty good.
Yeah. Only in the last about 2 weeks or so, I've been using about $4,000 for all the trades at any one time. And I'm already up around 350 or so. So yeah, it's a good return in just a few weeks time.
Very cool.
So this is just a list of some of the things that you would get. You obviously get the Discord access. You saw the order details. They're pretty simple to read, but I'm always in the room if you have a question. You get me 24/7 if you need help. You get the bonus trades. I have a technical analysis channel too, which I post technical analysis. And if you need by request, I can do a technical analysis chart for you. And we're gonna do a monthly Zoom meetup, and that would include you guys, which would be the earnings trade group, and the other traders that I have, which are the full service traders. So it would be one big monthly Zoom meetup if anyone has any questions and concerns or discussions and stuff.
Yeah, it's fantastic. I mean, getting this sort of value from somebody who's been doing this long it's unheard of. I mean, it's pretty unusual in the industry to get somebody who's been doing this for so long and successfully. So, we've got this question, how much is the fees? Well, we can talk about that in a little bit, right? We can talk about how much you're charging for your time, which is pretty small, really, in comparison to the amount of work that you put into this. So.
Yeah, Vijay. What we did is, I hope I'm saying your name right, Vijay. We put together a price that we feel is fair, for sure, for all parties involved. I mean, there is a lot of work that goes into this, but for sure, it's very fair compared to some of the other services that. Let me be honest. I don't have any disrespect for any of the other services. I know a lot of the owners of a lot of the other services, and some of them I actually work with and for. But what they do, and again, not knocking them, but they do a lot of trades, and that really does increase your relative risk, let's say, of losers. Now, what you're getting here is you're getting hand-picked trades that I take them with you. So I'm not just a service that's putting a trade out there for you to take, and then we're gonna hope you make money on it, and then if you don't, well, all right, well, we're gonna have losses. I try to put out, like I said, 90+% probability of profit wins, or 80%, and I'm in it with you. So, my money's in the game with you. We're riding in the trade together, and if you look at it on what you can make over the course of a year or 6 months or whatever you think you might want to try to commit to, it's definitely, we feel it's worth it. And if you don't, I'm sorry you feel that way, but we try to price it so everyone can afford it. And it's something that you can easily make your money back in a short period of time.
Yeah. Sorry, I was just going to say, Martin has a question which is relevant to what you were just saying, which is, which percentage of your own capital do you invest in the strategy? Because I know you do other strategies, right? How much of it are you putting into the earnings trade stuff, roughly? Just is it like 50%, 10%? Like, kind of give people an idea of how much you're using these particular trades. Like, well,
this is a huge percent, definitely. Every earnings season I drool. I can't wait for earnings season because, again, we have that event coming up. It's a binary event where the stocks value, the price of their options are elevated to the max because we know they're going to be reporting earnings. So I look forward. I trade it heavily. It's a good big part of my portfolio. Now, because I do have a lot of positions on at any given time, I don't overextend myself with margin. So I mean, I can't tell you that it's not 100% of my trading. It's not 50% of my trading, but it's whatever available credit buying power I have at the time. It's a good chunk of it. Because again, remember that money is coming off the table at the end of the week. So yeah, I go for the gusto on it. Sure.
It's a beautiful thing about these trades is they're short lived. You know, like they're not 6 weeks. They're usually like a few days or a week. You know, which is it's a nice time frame for people. I like that style of trading. So yeah. Do you have any other slides coming up, or should we go to kind of like?
I do. I'd like to give all the attendees and the people that were nice enough to spend their time with us tonight and have question stuff a free trade. So if you have a pen and pencil, a pen and paper, or a pencil and paper, grab that. And if you have a pen and pencil, great, even better. But here's the trade. It's for tomorrow afternoon. It's Micron Technology. So MU reports tomorrow afternoon. Let me just stick to my slideshow here. By the way, here it is, free for attending tonight. It's MU. And based on all the analysis, this is the trade, which I did today. And I'll show you my confirmation in a second. It's actually at the bottom here. And I believe Lance filled on it as well.
Yeah, I got it within a few dollars of what you got.
Yes, what I do is I always get into the trade. This way I can post so I know what to tell you, what the price is that you should try to fill at. So I get filled at 180. The trade is it's right here in front of you. If you want to screenshot it or write it down, it's a long iron condor. This week's expiration, 9/27. You're going to be buying the 93.91 put spread and the 94.96 call spread. You're going to try to fill this all in one order. You're going to try to fill it for 180. Try to do it first thing in the morning because that's, again, it depends on where Micron is going to open in the morning, but you should be able to get a fill near about 180, 185. I wouldn't go any higher than 185. Lance got 184, which is fine. The margin used is $180 per debit. And I'm $180 per contract, sorry. The max profit per contract is $20. So again, if you do one, you'll make $20. And again, $20 using 180 is 11 cents on your money. And if you get to keep all that, if you get to put this trade on at $20 per contract, you do five. Let's say you do 5 contracts. You bring in $100, and if the stock moves with outside of these short strikes, which again, like Lance said earlier, it doesn't have to move a lot here. The price of MU right now is $94.
Yeah.
Yep. So the price doesn't have to move much. It has to move above 96, or it has to move below 91, and stay there by the end of the week for full profit. And if it gets beyond those strikes, 91 and 96, it will be in profit. But again, you're going to want to have theta work its magic on the short strike to maximize that profit. But if you let it expire for at the end of the week, you'll be keeping 100% of that premium, which is how most of these iron condors have gone this season. So that would be the game plan that we're going to be looking to do. And Micron should make a nice size move, even though we don't need a big move. It should make a nice size move where you can be able to rest on knowing it's going to close with outside of those boundaries and keep the full profit. But if you're not confident in keeping it that long, then by all means, as long as you're able to sell for some type of a profit, that would be your decision based on your risk levels.
And so for you guys that are thinking about taking this trade, you could always paper trade it or do like one contract, so it's not a huge risk for you. And within Correct. The next, we're going to run this promotion to Jim's Discord for probably about a week. So if this doesn't work out in a few days, and I wouldn't judge anything on one trade, I mean, that's silly. But if you like the style of trade and you're like, this is going in my favor, this is good, then you might want to consider signing up. if not, I wouldn't be put off by the fact that maybe this one trade doesn't work that fast for you. So it's just something to kind of bear in mind. It's like, maybe it feels right for you, this type of trading. So, yeah.
Yeah. Also, what I like about this type of trade is you really only need a small move up or down. If you get a dramatic move, you're still going to be at max profit anyway. So you're thinking a bit opposite of sell side, where if you sold strikes that are a little further away, a big move could be a little dramatic and could be a loss for you there. But we really only need a small move to make the full profit.
Yeah,
exactly. I couldn't have said it better myself, guys. And keep in mind, don't panic either way. If the stock doesn't move much at the opening of after the earnings are released, there's sometimes that delay effect, because that's trading. That's how it goes. Sometimes you could have a big move in the beginning, or you could have a delayed move. So if we put one of these on and the next morning it hasn't made a dramatic move, or it's not outside the strikes, we don't panic. We don't get out of the position. We give it time. We give it time to move.
Yeah, I saw that with NVIDIA a few weeks ago, where the initial move didn't happen, but then it happened the day after. So yeah,
exactly, Lance. Yeah, initially in the video, it was like, wait a second. I thought it was like, wait a second. Didn't you report earnings? And it was funny because it was trying to head fake up, down, up, down, up, down, and then finally the buyers ran out. There were no more buyers, and it had nowhere to go but down. And it was a successful trade. It closed below the strike, the 120 strikes that day. Sure.
Cool. Yeah, we're getting some more questions going on here. How many slides do you have left here? I'm just curious. Are we into the...
That's it. Thanks for asking. I was going to tell you. That's it. We've successfully gone through every single.
All right. Well, that brings us to the sort of component where we have try and answer people's questions here, and then just give you the opportunity to join Jim in his Discord. Veteran trader who has made. And this is a question that came up actually that I wanted to point out again. What is your percent of your account that's up this year or this quarter? Or what's the best way to judge, is this a profitable strategy? So we've had that question a few times. I know you're up 60%, but is that just this quarter, or what are you up for the year kind of thing? It's always good to know overall, how profitable can people expect this strategy to be, at least given local, the last year?
So I can answer that. I can't get into my account at the moment and say how much is up because of the earnings, because I don't separate it that way. But let me use an example of let's say someone who joined in the beginning when things were being offered at a certain price level. I believe most of them that joined in the beginning at the price level at the time have made about 8 to 10 times their money. So if you spend, I don't know, let's just say $99 for the month, and you were in for this season, earnings season, which was 3 months. Let's just say you spent $300, 8 to 10 times that.
Nice. That's really good. Yeah, that's fantastic. So, a few other questions here. How do you protect your account from up and down? I guess is what you meant to say here, Hamad. How do you protect your account from up and down? So I guess people are so worried these days that they're going to make 90% of their trades and then they're going to give it all back. So I guess this is a really relevant question: is how do you not give it all back?
So Hamed, that really actually falls on you, the trader. You have to protect your capital. How I protect my capital is I don't go too big with size, and I make sure that if I'm going to go large in size, that I know what I'm going to do and how to handle that position if something were to go awry, or the stock gets the options get challenged. How do you protect any account? It's risk management. It's not going too much. It's not going over your head in a trade. Not trying to. That's the one thing that we don't do is, and some of these other trading rooms might is big wins, but sometimes sizable losses. You're never going to say a trade. We put a trade out there that's going to say this is going to make $3,000 if it works right. We're not going to have $3,000 swings like that. You're going to make steady, consistent income, and if you're in a position where we have to deal with a roll or whatever. It's not a loss in the sense that you're not closing out that position. We're going to be able to maneuver around the position. So how do you handle the ups and downs? The only way I can answer that is your own risk management. Follow the trade exactly. Don't try to cut corners or try to modify the trade, and don't go too big in size.
Yeah, it's a good answer. Martin J has a question here. In the case of the MU case, how is the play of volatility contraction? So did you give an example of MU in the presentation?
Okay, so in MU, Martin, here's how that works. So this is a long, correct, but within that long there is a short component, right? I would assume, Martin, that you're familiar with. I would assume that you're familiar with, let's say, spreads. So you're buying one and you're selling one. So basically, the short one is the one that we're going to be working off of the theta. All right.
Yeah.
Now, Yak, to answer your question, again, now you're getting into the nitty gritty and the minutia of where is it marked to market and all this other stuff. So there's really no answer to that. There's really no answer to that because it doesn't really matter. If you're managing a trade, you're managing the trade. And if unrealized losses are something that you are overly concerned with as far as getting out of control, then I don't know. I guess maybe you're not familiar with how to manage a position that's gone maybe against you in an options situation.
And I think that comes back to the point is your trades work, but when they don't work, you're also an expert at actually making them work. Like you finesse them into working. You're not one of these people that roll endlessly and then go, oh, sorry, you've lost. You tend to be able to correct things pretty quickly. And
again, you're talking about if you follow the guideline of it's one contract per trade. One contract per trade is not going to ruin your account. Again, if you risk management is up to you, Yak. You have to follow risk management. That if you're in a situation where you have to roll for a few weeks or a month, it's not going to be the end of the world for your account. So you can't oversize.
Good point.
Yeah, definitely. So hopefully this has been a very in-depth overview of what Jim offers. And I think it's important at this point that if you still have questions, you can address these questions to Jim or, via me or Lance. If you know like how to contact us, we can contact Jim. Jim, do you have an email address that we could post that people could contact you on? Is that probably an easy way to do things, or do you not have a
Sure.
email?
Sure. Let me post that. Yep.
Yeah.
Well, I'll send it to you. I guess can you post it?
Yeah, I can post it.
Yeah.
You put it in the private chat. I'll just copy and post it. And because sometimes people have a lot of questions, and one thing we're about to go into is how much does it cost to join Jim in this journey, and it's something that is pretty important. It's not a lot of money. So if you send me your email, I'll just put it in. There we go. So I'll just put it in. So if you want to reach out to Jim directly, you can do that via the email that I'm just about to post. Because I know a lot of you guys are sophisticated traders and I recognize a lot of your names. And I know you have a lot of questions. So if you want to reach out to him and ask more questions, here's the email to reach out to him on. I'm just posting it in the chat right now.
I already got it, but it's okay.
Okay, so it's gone out in the chat right now. So let's talk about Jim's service, because this is what this has all been leading up to. You guys know that we have people on and we talk about their strategies and we vet them and make sure that these guys are the real deal. And there's no doubt in my mind that Jim is one of the best traders that I've met, along with Lance. But in terms of experience and effort that's put in to refine strategies that work, Jim is one of the best out there from what I've seen. And I've interviewed some of the huge names in the industry, and they're not as good as Jim, or Lance. And so one thing we want to talk about now is, can you join Jim's Discord? How much is it going to cost you, and what do you get? So that's kind of like the next or final step to this whole process. And along the way, you can always ask Jim more about his track record, because I see a lot of questions about that. A lot of people feel like maybe that's one of the most important questions of today, especially given things like Volmageddon that happened, where people were making 95% of their trades were winning, and then boom, suddenly we got hit really hard. And so it's easy to get kind of stuck in that route where you're like, okay, I can win 95% of my trades, but then like boom, suddenly I've lost all those profits. This is a little different, and it'll be interesting to see how this fares, because you don't have that exposure. Like, you don't have constant market exposure. You just have these events, which is really nice.
Oh yeah,
So
Volmageddon didn't affect us at all. Not one bit.
it didn't affect you, no. So that's a really good point. I'm glad I brought that up, because it really does help to say, like, if the market goes really bad, we have a huge VIX spike, these strategies still work. It's a bit like day trade scalping, but on a more of a swing trading earnings, kind of focus. So yeah. So let's talk about that. There's some more questions coming in, but let's get this offer in front of you guys, because I think you'll be excited to see. It's not that much, and I think it's worth every penny plus probably 10 times more. So let's just check that out. So what I'm going to do is I'm going to post the offers. We have 2 offers that Jim authorized me to post for you guys. So I'm going to post them in the chat. The first one is for 6 months. So if you don't want to commit to a full year or lifetime, this one gives you 6 months of access to Jim's Discord, where he posts all this stuff. And so here is in the chat right here. I'm just posting it. And so that should pop up for you guys. And you get everything we just talked about. You get the real-time alerts in Discord. You get access to Jim to talk about these things in detail. And he's as dedicated as people like Lance is. So he's not somebody who's going to be standoffish and not answer your questions and things. And here's what you get as a member. You just put up the slide. You get the Discord access. You get clear, concise, professional order details with risk level. So that idea that the trades are on a risk scale, which is really good. You get 24/7 hour support while he's awake, which is good. And you get a bunch of bonus trades as well, technical analysis stuff, monthly Zoom meetups. So that's the lowest tier, and that's earnings for the 6 months. And what price was that again, Jim?
That was $5.99.
Yeah, so $5.99 for that. If you click on the link in the chat right now, you can go and check that out for sure. So definitely check that one out. And then if you want to commit to a longer term, you get a little bit of a discount. So for the lifetime, which I'm just about to post in the chat right now, you can go and check that out. It's only $8.97, I think, which is still a bargain given the quality of this stuff. So I'm just posting the lifetime. I think it says yearly, but we changed it to lifetime. So if you click on that, you'll see what you actually get from that as well. So yeah, it's pretty good. So yeah.
I may be trading for a long time, but this is what I do. I do 24 hours. This is my job, guys. I don't I don't knock anyone who has a full-time job in trades, because that was me at one point. But I'm a full-time trader, and as long as God doesn't take me to heaven, I'm not going anywhere. So if you sign up for lifetime, I've got a good number of years in front of me, and this is what I love to do. I eat, sleep, and breathe it. So, it's if you want to go to that next level up, the lifetime is probably your better pricing point. And then you're done. It's a one and done, and you got me. Yeah. And you get the extra bonus trades, and you can also transition if you wanted to be a full-time member of the other part of the service. But that's up to you. Right now, we're talking about the earning service and bonus trades. So,
and I think it's important who you're getting these things from is so important. To get something from somebody who's been doing this long and does it as his full-time income. There's no sneaky business. There's no side job. This is his full-time income, and it's actually taken him a long time to decide. I actually could diversify my income by selling some of my knowledge, which is a very legitimate and perfect, smart business move. And this is the first time that he's really doing it. And I'm really happy that Lance and I are able to kind of comment on this and bring this to you guys. So I think it's pretty good. So shall we do a few more questions and then wrap it up?
Yeah, that's fine. Yeah.
All right, let's see. So Martin J has a question. I've read that last week for options has full gamma risk. What can you say about that?
I'm sorry. What was that again?
So the question is, I've read that the last week for options has had full gamma risk. What can you say about that?
Oh, okay. Yeah. So Martin, so the Greeks that really matter, and so we're not going to get nailed on gamma. What we're working with the most important factors that we're dealing with is theta and implied volatility. Gamma doesn't affect us one bit.
Well,
Again, yeah. So I know traders have a lot of worries and concerns, and then sometimes if they don't have any more, they find more and more and more. I'm not saying that's you, Martin, but here's the thing: when we put on our trades, one of a few things is going to happen. The stock is going to move up, it's going to move down, or it's going to move sideways, and it's going to happen within that week. Whatever it does that week is fine. We've already got all those details figured into the trade, so gamma can go through the roof. But we know one thing, right? Theta is going to eat away at the options that we sold, the positions. And again, even if you do a trade like this Micron, which has a long component, the component we're most concerned about is the short strike, and that's where theta works. We want the stock to make a move, and again, not a sizable move like we have Micron needs to make about a $2 or $3 move, but gamma doesn't really play into the equation. But good question.
Yeah, so a few people are asking, is there a trial period? I'm not a huge fan of trial periods overall, because what you do is you get a bunch of tire kickers that don't really commit to it. And I know from the consumer point of view, trial periods can be useful. But like if you do a trial period and the first couple of trades don't work, the chances are you're going to want a refund and everybody's going to lose. Like he's going to lose, like Jim's going to lose the time he spent like tutoring you or helping you with problems. And you guys are going to lose because you're not going to get full advantage of the large data that is needed in order to make progress with these strategies. So that's why a lot of places don't offer refunds and they don't offer trial periods, although sometimes we do with theta traders. But with this, it's like do or die. You know, if you're going to commit to it, commit to it. There's no point in having refunds. This is the real deal. He's not trying to pull the wool over your eyes. Like Jim is the real deal. He's got the experience of probably higher than 99% of the traders out there that are offering these services. So if it's not for you and you desperately want a trial period, I don't think we're offering that. It's not something that like is a good idea for either party and overall. And I know that can be a hard pill to swallow for people that are like not sure about things, like they just want to dip their toes in. But my point is, if you want to really make a difference in your life, you have to like take that leap of faith. And you have to commit to it. Otherwise, you'll take one trade, it'll be bad, and you'll go, this sucks, it's a scam, I'm not doing it anymore. And then he'll go on and make 10 wins in a row, and you'll be mad, but you'll already have demanded a refund. So Jim doesn't have any refunds on this program.
No, I don't. But I'll do this, not to interrupt you, Russell, but here's what I'll say so if there's some people on the fence and they're saying, well, I'd like to do a trial, but let's do this. So we were pricing it at $5.99. Let's make it $4.99, 6 months, if you'd like to try it. And tell you what, you have 2 weeks to turn that into a lifetime. That's how we can give you a trial. So instead of $5.99, we'll make it $4.99 for 6 months. If you join at $4.99 for 6 months, and within 2 weeks you say, I like what I see, make me a lifetime member. We'll honor the $8.97. You can bump it up to $8.97. Is that fair?
Yeah, that sounds fair.
So here's the 6 month link right here. So the 6 months, I can't click on this right now. Is it set to $4.99 or?
Yes, it's going to be set to $4.99. Yes.
Right. So that would be pretty good. So, okay. So definitely check that out if you want to only half commit. I mean, honestly, you guys should just totally commit. That's always been my thing. I always jump in. I have so many services, and I jump in for all these things. And I jump in on the 6 months if you're not happy. One guy's asking, is lifetime everything included? Everything's included in both the 6 month and the lifetime. It's just for the lifetime, you get it for lifetime, right? So
Yes, exactly. Yes.
so, yeah.
It's the earnings trades and the bonus trades for the lifetime.
Mr. Goose Eggs is asking approximately how many trades will we see in 2 weeks? That's a good question.
Well, here's how I work that for you guys that join the earnings service. So there is a lull between let's say the ending of one season and the beginning of another season. And that's about a week to 2, maybe 3 weeks. Those are the weeks where I give you extra bonus trades. How many trades? I can't, I'm an active trader. So let's just say on the bonus side of things, between bonus trades and earnings trades, even when it's slow, 5 to 10 a week. So 10 to 20 in 2 weeks.
Yeah, I think you did 4 just today.
Yeah, 4 or 5 today alone. And then I think 4 or 5 yesterday. Yeah. So in 2 days, there's 10. It's not always, gas pedal to the floor like that. But when the trade presents itself and it hits it has the high probability of profit, we put the trade on. That's how you trade. If the trade sets up right, you have to go with your trade, and then you manage it.
Yeah, and so just to reiterate, with these trades, roughly, how much have you made over the last year? So lifetime is this much. I'm just posting it. So what can people expect? I mean, I know this is always hard, and you can't promise anything. But if you were to take these trades for a year, just these trades, not the bonus trades, roughly what would people expect in terms of returns, just from your experience over the years?
Well, again, that would be determined by their sizing of each position.
That's true.
It's really
That's
hard
true.
No two traders are going to trade the same risk level or contract size. So it really is up to you. I mean, again, let's go to the lower end of things. If traders that were with me from this season starting made 8 to 10 times the money, let's cut that in half, just for argument's sake. Cut it in half. 4, 5 times your money. If you're going to spend $8.97 for your rest of your life, and you're going to make 4 times that in, let's say, a year, because again, we can't say for the rest of your life you're going to make that. You're going to make a certain amount per year. So 4 times your investment, let's say. So $8.97 times 4 is what? $4,000. 9 times 4, $3,600. 400%. I mean, that's on the low end of things. That's just giving you an argument for argument's sake, that type of a thing. I mean, I honestly can't. I'd be lying if I told you you're going to make this much money. I can tell you how the trades that we've just done have gone, which we have. We've shown you that a lot of them are for 100% of the capture of the premium. So add it up. If some of them are $50 and some of them are $100, some of them are $58, and you're doing 60 trades, 66 trades, 70 trades per season, add it up.
Yeah, lots of good questions here, man. This is cool. So Martin J's asking all the hard questions. He's saying, you've mentioned risks from 1 to 5 on these trades. Of these 64 trades, how is the risk distribution? That's a really smart question. Are they all 1s? Are they all 3s? Are they mainly 5s? We just don't know.
Great question, Martin. Thank you again for your comment and question. So I would have to say the majority fall in the category of 3. Some being a 2, some being a 4, very rarely a 5, although there are some 5s. I don't really believe there is a 1. 2 is, I think, the lowest we've had this season, and then there's majority are a 3, and that's just an average risk level. And even a 5 doesn't mean hold your breath, don't sleep tonight, get up early in the morning, and eat your last breakfast. it's just a level 5.
Get your affairs in order.
It just means, listen, this one has a little bit more of an element of risk, but we are aware of that risk. It isn't like we're going to find out in the morning how risky was this thing. Although, you're going to have a position that goes completely awry. Now, we're going to deal with it. We're going to handle it. But you don't have to worry that, oh my God, this is a level 5. I am going to lose my house. Never.
Yeah, exactly. It's a bit like lottos, right? People mention lottos and they often work out, and that would be a 5 probably, or not even, even a 5. But yeah, so what do you guys think? You have any more questions? Because we've been going an hour and a half now, which is fantastic. This is a really good engagement from you guys. So if there's not any more questions, it would be probably a good idea to wrap this up pretty soon. But we're happy to take any more questions. I'm going to send out a few more emails over the next few days, and you guys can check out whether you want to buy this. You can check out any more questions. Kevin's saying it seems like a good strategy. It is a good strategy. I mean, it's from a guy who's been doing this for 30 years, refining it over that time period. That's very unusual in this industry. And so I'm excited to be part of this and be able to bring this to you guys. So it is a good strategy for sure. But the goal going forward now is I'll send out a few follow-up emails if you're on my email list. If you're not, subscribe to the YouTube channel, and I'll also be posting some videos and things as well as we go forward. That trade will be interesting to follow, the trade that Jim gave you. And it could be something that might persuade you either way, right? You might be like, wow, this thing actually worked out pretty well. But don't be dissuaded if it doesn't, because obviously, it's Sod's law where, we give out a trade during a presentation and then it doesn't work. It's like the 1 out of the 66. It doesn't work. So we'll see how that goes. We'll see.
That's
how it
like
goes.
when you go to the doctor and you've been sick all week and you go to the doctor and suddenly your symptoms are gone. It's Murphy's Law, But this trade has a high probability of profit, the MU trade. But again, that's a future trade. We have 66 trades under our belt that is factual, and reviews. And also, Lance has been in the room now for, I forget how long, a month and a half, taking trades alongside, getting an eye on it. Lance and Russell wouldn't be here, guys, if they didn't see it with their own eyes.
Yeah, definitely agree. So before joining, I was a bit hesitant to do earnings trades. Like I would put credit spreads at times that go into earnings. And usually I would do it about a month out, try to close it out before the earnings are there. But sometimes I'll stay in the earnings. But now after being in your room, and we did talk a lot on DM, one-on-one. So I'm definitely more confident in doing these earnings up trades as well.
So Martin's saying thanks to Jim, Lance, and Russell, and we appreciate that because we put some effort into these things, and it's good to see you guys engaging and talking about this and giving your feedback and giving your point of view, which is, does this work? That's been the overall theme for tonight, is people want to know, are these trades working? Yeah, they're working quite a lot, but are you giving back all your profits? And the answer is no, he's not giving back all of his profits on this. It's not like some crazy sell side strategy where it's just pennies in front of a bulldozer type of thing. It does end up overall profit, is an overall profitable strategy. And it has for a long time now by the sounds of it. So, yeah.
Thank you as well, Martin. Appreciate your questions and showing up tonight. And hopefully if you take the MU trade, that it's a profitable trade for you, sir.
Yeah, and if you guys aren't subscribed to my channel, subscribe to it. I'll probably do a video tomorrow where you can also get on my email list, and I'll make sure you guys get up to date on how the trade that Jim does is progressing, and also some more links on how to sign up for a service if you so choose, because I think it would be a really smart decision. I know I'm going to start taking part in it more. I know Lance is already integrated into the system. I'll probably integrate into the system as well and start taking these trades. And we're probably going to do this deal. These are reduced prices from what Jim could probably charge. And so these are reduced prices, and this will probably last about a week. So you guys have some time to decide, but the prices are going to go up because somebody like Jim doesn't come along that often. Like, you see a lot of these gurus and people that are claiming to be 30-year professionals. Jim's actually a 30-year full-time professional trader with a strategy that works really well, and it works for the majority of people that try it. So it's something that, we're not going to keep the prices at these current prices. This is just kind of a launch to see if you guys like it, see if you can benefit from it. And we're going to do this for probably about a week. We're probably going to see some emails from me, some videos, and probably similar from Lance in terms of, you theta traders guys. They're going to see this as well. So anyway, I hope you guys found this helpful. I know I did, and I'm excited to work with Jim going forward, and hopefully you guys can see the value in this setup.
Yeah, thank you guys for everyone that attended for sure, and all the questions. And hit me up if you need to on my email. I'm always around for sure. And hope to see you. If you need time to make a decision, that's fine. No harm, no foul if you decide not to. It's a strategy that we've come up with that works. And hey, it's found money. If you want to, join another place where you can hang out and you can get trades that have been screened for you by someone like myself and who's in the trade with you, and kind of holding your hand along the way, and you get to learn. I use it as a teaching moment too. Don't forget the monthly Zoom meetings that we're going to have are going to be able to have questions and answers and help you guys try to fish a little bit on your own too.
It looks like Iraqi Trader is already in Lifetime. I don't know if you just bought that or if you're already part of his system, but that's cool. If you joined already, that's fantastic. So that'd
nice.
be really cool.
Yeah,
I'm gonna leave the links one last time here for you guys that are maybe wanting to join. I'm gonna post the 6-month link, which is an unusual link to have, but at least it doesn't, it's not high ticket, so you guys can check it out. So here's the link for 6 months, just in case you can't see it above. So here's 6 months for the subscription. Go and check that one out. And then I'm going to post the Lifetime one just below it here for you guys as well. Hopefully it works. And you can join for the Lifetime if you are already convinced. And so, yeah, so it's pretty cool. So, yeah, we're going to call it a day at that. I hope you found this useful. I know I did, and I'm glad that Jim's on board with the Lance and Russell mafia here. So hopefully you guys are seeing the value in this. I know I do, and I'm excited to start taking part in these trades as well. Yep. So given
looks
that
looks like we're gonna get Kevin too. He's in Theta Traders as well.
Okay, cool. If Lance is in, so am I, is what he said. So look at this. This is the value of having somebody like Lance on board. If Lance is in, so am I. So Kevin's probably going to sign up as well. If Lance is, that's exactly how I feel. If Lance is taking these trades and he's making money on them, Lance is, you guys know Lance, most of you, but if you don't, Lance runs thetatraders.com, and basically he is, I would say you're like a genius, right? That's kind of how it goes. You're an Ivy League graduate. You're really good at what you do. So I think an endorsement from Lance is worth its weight in gold. So
yeah, I like these trades. I'm going to keep doing them going forward because I think this is another good strategy to bring in that income.
Iraq's Trader saying he's already seeing great results in the Discord room, and so that's a huge endorsement for you guys that are looking.
Thank you, Iraqi. Yes, I didn't say that, but some of the trades that I do and the other trades, and again, they're going to be part of the bonus trades. 60%. We just closed a couple today. 62%. Roku, DJT, and Reddit, RDDT. We closed for nice size profits this week, and those will be again bonus trades for you guys. So, yeah, for sure.
It looks like we have Shyam as well. Shyam just joined Lifetime as well, so that's fantastic. So, I think you're going to love it.
Shyam. Welcome.
Yeah. So welcome, Shyam, as well. All right, guys, let's wrap that up. Thank you very much for sticking to the end. You guys have been engaged, and it's always fun to have people asking questions, especially the serious questions as well. So I've really enjoyed it, and I think Lance and Jim have had a good time here as well. Let's wrap it up. I'll send out some emails and do some YouTube videos and things going forward. And for you guys that are on the fence, maybe that'll help you decide, like, okay, maybe this is for me, this maybe it isn't. And just let me know. You can contact me or Lance or Jim. We put Jim's email, I think, in here. If you don't have the email, you can always go through Lance or myself, and we can put you in touch with Jim for more questions if you're still unsure about whether this might work well for you. So given that, it's been an hour and a half almost, one of the longest webinars we've done. And thank you very much, Jim, for your presentation. It was really good, and it looks like a lot of people are starting to see the value in your experience.
All right, it's been my pleasure. I like talking about trading. I love helping others learn. No one helped me aside from my one good friend I had back in the day. Because one thing, guys, just to end it on this, when I was learning how to trade and everything, it was a very different atmosphere. Everyone was trying to learn it so much that when they learned, they didn't want to share it because they thought you were going to take money from them. This environment we have now is totally the opposite. Yes, there's some fees involved sometimes, but you get access to experience and proven ways that we didn't have back then. So by all means, I appreciate the tough questions. That's the only way that you can really be successful in anything, is to answer the tough questions, because the easy questions usually answer themselves. But the thing about this is, like I said, I'm always around in the room, and I'm always around afterward, talk shop and talk about trading. And I don't like to get into theoretical stuff, but we could. And the thing is there's always another trade around the corner. So, and another day to trade, God willing. So again, thanks for showing up tonight. Thanks for the guys and girls that joined tonight. And thank you to Lance and Russell for putting this all together. And, it was a lot of work, and it's a late night, but let's make some money tomorrow, guys.
Sounds
Definitely.
great.
All right. Well, thank you very much, guys, for attending, and just let us know if you have any more questions. And yeah, thanks again, Jim. Let's call it a night. So thank you very much.
Okay. Good night, everybody.
All right. Have a good night.
Good night.
I guess.